Hello and welcome to the Ask Assaad show. I'm Michael Gaines and glad you are with us as we have a conversation to bring insight out and bring you perspectives and analysis on things happening in the market of energy and business around us. So glad you are joining us. Before we jump in and get to Assaad, I want to bring in Shelby Dumaine to let us know how you can provide not only your comments, but also questions and ways to participate in today's conversation. Hey, Shelby.
Hey, Michael. So there's a couple different ways folks can get involved if they're watching at home, whether on Facebook, LinkedIn, or YouTube. Perhaps the easiest way, if you would like to ask Assaad your question, is you can actually comment it down below, regardless of the platform you're watching from. I'm in the comment section for all three of those throughout the show, and I'm going to gather as many of those questions from the audience. And then at the end, we will bring those questions up for Assaad to give his thoughts. So go ahead and comment those down below if you have any, and then say after the show if you wanted to reach out to us and maybe you had an idea for a future episode or another question or just a comment you'd like to let us know about. You can do one of two things. You can email us at askassaad@nov.com. So that's on the screen now, askassaad@nov.com. And then the other way is you can call us. So you can leave a voicemail and you can make it anonymous, or you can let us know your name and company if you would like to, and we can shout you out on a future episode. But that number also on the screen is country code +1 346 223 4799. So those are some of the ways you can contact us after the show. But as a reminder, if you have a question for Assaad on today's topic, go ahead and comment that down below, and we're going to get to as many as we can before we run out of time here for the show.
All right. Thanks, Shelby. And thank you all for joining us as we jump into a conversation. If you're just tuning in, feel free to put in where you're watching us from. We always like to know where viewers are joining in from. So certainly put those in the comments, and we'll try to get to that a little bit later. But first, certainly want to bring in our main man of the hour. So Assaad Mohanna, NOV's Director of Business Strategy. Hey, Assaad, good to see you. You're just the man of this hour, not all hours.
I'll take it. I'll take what I can. How you doing, Michael?
Good to see you. So I know normally we kind of do a week in review and talk about things that have happened, but I think in this case we'll actually just kind of jump right in. So I think folks who kind of follow some of these headlines might be aware, but just recently, Schlumberger announced the sale of I think the majority, if not all, of their North American frac fleet. Is that right?
That's absolutely right. They announced they would contribute, and that's the terminology they used. They will contribute all of their onshore hydraulic fracturing business in the United States and Canada to Liberty Oilfield Services.
Yeah. So I really do. It's not a competition that I like to advertise, but I try to keep up with you or
competition.
It's always a competition, they say. But for you, like, is this a surprise? Because I was candidly, right, I'm not always on top of these things, but I was a little surprised. Are you surprised at this?
You know what? It's a good question. It might be a surprise. It's big news for sure, Michael.
Mm-hmm.
I wouldn't necessarily say it's a surprise. If I kind of track back to what happened in the last just couple of months, I won't go too far in the past. We've seen a lot of companies struggle, a lot of strain on the North American market. Practically unconventional field development in specific, and we saw a lot of the companies cut costs, restructure, only to keep some, first of all, maintain or limit the amount of losses or keep them at a minimum, and at the same time keep some sort of cash flow to service their debt. That's number one. Number two, if I just zoom in a little bit onto the frac industry in specific within the unconventional space, that's taken a massive blow. Operators almost across the board almost halted completely their frac operations just to maintain whatever cash they had, especially when we're seeing demand in reduction in shut-ins and curtailment, to the point where we saw maybe 300 frac spreads active before February 2020 turned down to, maybe a handful, maybe 10 frac spreads active at some point, until it picked up a little bit back again in the last few weeks. So really, really difficult times for everybody trying to play in that space. And we did see some really good companies like BJ Services, FTS International, or CalFrac filing for Chapter 11 or bankruptcy just to get some investor protection. So it hasn't been a surprise that companies are struggling and are looking for an exit, some sort of a support. Now, my third point, and I think that is the biggest one that clarifies this and drops the surprise factor completely, is Schlumberger's recent earnings call, where their new CEO Olivier Lepage pledged to trim down Schlumberger's onshore operation for frac and completion. So really, their hydraulic fracturing, which they've recently acquired, not too many years ago, this new CEO is saying he wants to kind of stay away from it. So keeping Schlumberger, with using his terms, a more asset-light company who licenses technology instead of owning large capital businesses. So this deal is really aligned with Schlumberger's long-term strategy. So not much of a surprise there.
Yeah, and I guess when you kind of paint it out like that, I guess that does make sense, and certainly interesting also to your point, which might be a future conversation. I know we've talked about business models before, but typically kind of in the oil and gas arena specifically, and kind of in the drilling contractor space, but probably looking at holistically business models in the energy industry and what those look like and what those are looking like in the future. That might be a conversation we can look to as well, because as you know more than I, as you are in the middle of either challenge, whether it's growth, either increasing, decline, or anything in between, business models are always being looked at and tweaked. And I think that's an interesting point as well, kind of the asset light approach.
That's so true. You're right, Michael. Everybody's going back and sort of to the drawing board and say, okay, we've been trying to innovate, we've been trying to bring technology in, but maybe it's something about the business model that needs to change, and that's a very viable way of innovation too. Yeah.
So let's talk then, and maybe kind of pull a little bit more of a magnifying glass in on the deal itself. You talked about some specific vernacular, right? That they're going to contribute, some of the equipment. So maybe can we dive in a little bit and talk about what were some of the specifics on the transaction?
Yeah, the deal really. The announcement included the mention of a 37% equity stake for Schlumberger that stays in the company. So also the combined company was going to have a market cap of $1.2 billion, making that 37% about $445 million worth for Schlumberger. So think of this as a newly formed company that puts Liberty and Schlumberger's onshore hydraulic fracturing business in the U.S. and Canada together into this newly formed organization. And in terms of hydraulic horsepower combined, they'll have 2.5 million hydraulic horsepower, kind of doubling what each one of them had, making this new company second largest in the U.S. behind Halliburton. So really making this a big merger for that particular market segment. And to put that into perspective, 2.5 million for this company makes out about maybe 10 bit more than 10% in terms of market size. We've seen 20 million hydraulic horsepower in terms of capacity available out there for the U.S. Onshore market, although very little of that has been active. The deal is expected to close Q4 2020, so here in a couple of months, and the leadership of that new organization is going to be Liberty's current leadership. That's going to be I forgot the CEO's name.
Yeah, well, I had it written down too, so we'll go 0 for 2 on that one. While you look that up, I guess one of the things that we wanted to talk about as well was also looking at, like, kind of to your point, some of the organizations themselves, and kind of having a little bit of a perspective in terms of kind of the company profiles. Some folks, many are familiar with Schlumberger, but it's always helpful to kind of wrap around and have some perspective there, and then maybe also on the Liberty side. So maybe we can kind of start with Schlumberger and kind of a snapshot as to what that looks like right now.
I think the Liberty CEO, his name is Chris Wright. But anyway, yeah, Schlumberger. Yes, I think there's a big story there. So Schlumberger didn't always have an onshore activity in hydraulic fracturing. Only they did, but not the size they've had it before merging with Liberty. What happened in 2017, if you remember, Michael, Schlumberger and Weatherford came up with this idea of a JV or joint venture to form OneStim, where both would combine their efforts in that market segment to develop unconventional resources in U.S. and Canada. And the deal, again, that's 2017, was going to give Weatherford a little over about $535 million in cash, plus 30% stake in this newly formed business. That's to Weatherford. And really the effort was, how do we compete with the biggest player out there? It's Halliburton and other largely growing companies like Keen at that point. But comes end of that year, or January 2018, Weatherford comes out, abandons the JV, and instead sells its hydraulic fracturing business to Schlumberger. For how much, Michael? Do you remember? They were going to get $535 million plus 30% stake, but Weatherford needed cash, so they decided to sell off entirely. You want to give me a number?
Yes, I will pull the number out of the magic hat and say that was 300 million.
It's a little bit over than that, 430 million, which is still a give, giving in to the original price. So they're not getting exactly what they were offered. So 430 million for 600,000 hydraulic horsepower. So that fleet combined with Schlumberger's became the new Schlumberger hydraulic fracturing business in U.S. and Canada. And clearly Weatherford used that money to pay off their $7 or $8 billion in debt, and missed out on some of that recurring income from that JV. But so going back to Schlumberger past that point, fast forward to 2020, we saw what's happened. 40% of everybody's revenues dropped compared to the first quarter of the year. Schlumberger decides to exit that business. Now, it's important to mention that Schlumberger is not exiting the hydraulic fracturing business as a whole. It's just limited geographically to U.S. and Canada. They're maintaining their international frac business, their offshore frac business, which do still generate about $1.5 billion in 2020, and all of the wireline business that's also staying with Schlumberger. So that's a major reversal, major shift for what had been a North American buying binge over the past few years for the company, turning completely around. Stop investing in frac sand mines, stop growing fleets, whether Weatherford or anybody else. Just change course. Right. Now, some may say that Schlumberger waited a little bit too long to do the move. That it was they should have done that late last year or earlier this year before all this happened, because there were already signals. But back then, I believe the consensus was that the ask and the bid were too far apart. I think that's changed today, and the rules of the game are more in their favor today.
So let's talk a little bit about Liberty. So I know that some folks are familiar with them, some might not be as familiar. So Liberty Oilfield Services, and maybe kind of specifically to your point, kind of how they fit into the overall deal here.
Yeah, not a small company at all. Liberty was already one of the top-rated providers for hydraulic fracturing services. That's even before the deal. The combination with OneStim doubles Liberty's frac capabilities from about 1.2 to 2.3 to 2.5 million. So that really puts Liberty a jump forward to become the second largest hydraulic frac service provider in North America. 2.3 to 2.5 million horsepower. That means, Michael, if we're talking about 35 to 40,000 hydraulic horsepower per fleet, that puts the new Liberty at 60 to 65 fleets or hydraulic or frac spreads, with a more common 45,000 hydraulic horsepower per spread. That puts Liberty's new fleet size to 55 spreads. So we're talking about anywhere from 55 to 65 frac spreads for the newly formed company, depending on how much on average each spread has. Compared to Halliburton, who has closer to 3.5 million hydraulic horsepower, that's about 100 frac spreads. So puts it behind them. But a little bit ahead of NexTier, who's the newly formed Keen plus C&J that joined forces together last year, who will now have 2.2 million hydraulic horsepower or 40 plus spreads, ahead of BJ, ProPetro, FGS, and some smaller players like Patterson UTI, RPC. But clearly, I mean, we mentioned those numbers and those big frac spreads. A lot of that capacity is underutilized. It's warm stacked, cold stacked in a lot of places. So again, the summary is to that point, second player. Now, in terms of revenue, Liberty, before joining forces last year, booked close to $2 billion worth of revenue. Where is the combined Liberty plus OneStim today, would you say, in 2019 terms, would you say?
So what would be my estimate for 2019 in terms of revenue for Liberty?
Plus OneStim.
I would say just to make sure I got my number, that's what I was jotting my notes. So you saying about $2 billion for 2020.
$2 billion for 2019, and the size of the company over doubled.
Oh wow, okay. I would not. I would say it was maybe $1 billion and some change.
Yeah, so they grew quite a bit. So from the $2 billion they made in 2019 on their own, they're making $5.2 billion if you put the two companies together. Right. So, that's a big stretch for a $2 billion company in terms of revenue per year. If you combine the Schlumberger piece, that's 5.2, and the hope is that to grow even further because of the synergies they would find together.
Right.
How do we compare that to what Schlumberger made in that same period of time? Halliburton, the largest player, that's $6 billion. Those are some numbers I'm pulling from the Spears reports. $6 billion for last year, so not too bad for a new size of combined company, right? Mm-hmm. The other synergy point, Michael, is the customer base. I think one thing that this deal nails really well is the fact that there's little overlap between Schlumberger's existing OneStim customer base and Liberty's. Liberty's main customers in 2019 were Parsley Energy, WPX, Devon Energy, and Kraken Oil and Gas, according to a Rystad report. Schlumberger's top customers were Chesapeake, Continental, Oxy, and Exxon or XTO. So if that is combined into the same organization, that's growth in market share, that's growth in customer base, so little overlap or existing competition in the same space, which is a very healthy indicator of a good deal.
Right. Yeah, I was going to say that's kind of table stakes for kind of the M&A space is to your point, really wanting to see those key synergies or complementary components that that the combination is greater than the individual parts. So that's good to hear. On the flip side, I know that there could be perceived some challenges with a deal of this size and especially in both these particular times and some of the components. So how do you see that, or what's some of the analysis that that you've read that kind of talks to maybe just some of the considerations that might be on the horizon there?
Michael, if we really want to read into this deal, I would say it's an indicator that U.S. shale may not recover to earlier peaks. Right? The existing capacity out there does not justify the demand. So there has to be that consolidation that we've been kind of talking about in previous episodes. We saw already Baker Hughes, Weatherford, and now Schlumberger exiting that market, leaving Halliburton to be the last kind of global provider to play in that space. So it's becoming clearer and clearer that it's if you want to be diversified internationally, it's the frac industry has its own rules. So you can't play by the rules of international growth. But it's working for Halliburton. Now, in terms of market valuation, and maybe that's reading a little bit too far into the deal, but if we look at Liberty's market cap right after the close of the deal or the announcement that was done a couple of days ago or yesterday, Liberty closed at $1 billion, a bit less than that. Liberty in 2018 market cap was closer to $2.8 billion. So a significant drop, just like a lot of the other companies had seen. Now, after the announcement, the market cap jumped 38% immediately after making it. And if Schlumberger's cut was 37% equity stake, was considered a fair price, then the appreciation in projected market size and projected cash flows, that would have reflected a 58% increase in stock price, although we only saw a 38, maybe 42 at some point percent increase. So the investor out there is still a bit skeptical, a bit uncertain of the future. So saying in terms of valuation, there's still concern out there that, first of all, the market will get back to what it was, but also that the synergies between the two organizations, outside of organization synergies, overhead, etc., have yet to be demonstrated and have to justify further on.
So then, I mean, to look at that and say, okay, that makes sense. Understand, from a high level, but and really understanding some of those challenges. But I mean, it would this wouldn't be called the Ask Assaad show if we did. I know we don't have a jingle and we don't have any music or graphics. I wish somebody would create some, but
where is it?
It's somewhere in the coffers. I don't know, in the back somewhere. But if we had some silver linings, and looking at this, notwithstanding, the challenges that we talked about, what would that look like? What would be some of the items that you say, okay, well, we can at least look forward to some of these items or keep in mind?
Yeah, definitely. There's so much good in this that outweighs the bad, I think. First, for Liberty, I think there's a lot of room for the new Liberty to capture greater market share. So to them as an organization, they're going to benefit from this combined organization now that they have access to some Schlumberger technology, an advanced fleet. They're going to inherit some stuff from the Schlumberger OneStim organization. For the market, I think the benefits are even bigger. There's that trend of consolidation we mentioned earlier has to happen before any sort of recovery takes place, just for the supply and demand of hydraulic horsepower for that particular segment happens, for the supply and demand to kind of equalize and meet. Because right now you got 20 million hydraulic horsepower available out there for a demand of 5 million. So 3/4 of that demand's been wiped out. How do you justify building new technology, getting into electric frac, automating and big data? There has to be consolidation before you start building new stuff, and that deal does just that. In fact, I think it was Chris Wright who mentioned, the CEO of Liberty, that almost 1 million hydraulic horsepower of the combined capacity will be retired. And that'll essentially be the former Weatherford fleet that's aging. So from the 20 million, I think that this is going to take away a bit of that, getting us a step closer towards supply meeting demand.
Right. Well, and to your point, actually, I think in a previous episode that we had, I believe that was when we had the Spears brothers on. That was actually one specific comment that was made is, hey, we're driving by and we're seeing somewhat of a potential artificial fleet out there that really a large majority of that either needs to be or should be retired. So it is interesting to kind of hear some of those sentiments echoed by Liberty as well.
Yeah, it's certainly happening. And my last point would be is that it's good news for the customer at the end of the day. The lower costs that could be achieved through this combination of efforts, adding Schlumberger's assets to a company that's really pure play, and maybe something we haven't mentioned is the focus that Liberty has. What makes it so special is that that's what it does 100%. It's not distracted, or it doesn't have to strategize or dilute its efforts in other practices or other businesses. All it does is hydraulic fracturing, which makes it at an advantage in terms of focus, in terms of delivering their value to the customer. And with that access, now they're getting a somewhat of a better fleet. They're high grading, they're eliminating the older equipment, and the ultimate benefactor from all of that, hopefully, is the customer, who's gonna get at the end of the day probably a better price and eventually a lower cost per barrel. So the silver lining is this is definitely consolidations heading in the right direction for recovery, and consolidation means a cheaper barrel of oil going forward.
All right. Well, with that, we're gonna get ready to shift over to Shelby. I did want to look at the comments here. It looks like that we have a really great group listening from all over. So if you have questions that you'd like to get in on the show today, feel free to put those in the comment section, whether you're watching on LinkedIn, Facebook, or YouTube. And it looks like we have folks listening, let's see, from the UK, let's see, Nigeria. Scrolling down here, folks in Hockley, Texas, Argentina, Tunisia.
Nice.
Wow, we've got a good contingent. Chad. Let's see. I'm going to scroll down a little bit here. Brazil. Wow, yeah, Argentina again. Man, this is really great. So looks like a lot of folks out there, and certainly I know Assaad and N, both I appreciate you tuning in, and hopefully this is beneficial to you. So as we said earlier, if you have any questions or comments, you can put those in the comment section, or you can send an email to us, and we'd be happy to get to those in either a future episode, or email you or contact you directly. So with that, we're going to go ahead and bring in Shelby Domain and bring in a couple of the questions that we have in the wings. Hey, Shelby.
Hey, Michael. So this first question, Assaad, would you say that this is a trial marriage?
Oh, it's a good question. I think we've seen that being done whenever Schlumberger was in such deals in the past. So it's not a very far from reality idea. Schlumberger did that with Smith International and Cameron, kind of build a initial type of relationship, a JV. Weatherford's another example. Build a JV for a year and then buy out. It wouldn't be far from the truth if Liberty does the same thing, say in a year's time, even less, maybe towards the end of the year, and decide to buy out Schlumberger out of the deal. That's a possibility, I would say.
Mm-hmm. Gotcha. And then this next question comes from LinkedIn, and they're asking about, there's some conflict in Colorado politics, and I know we kind of stay away from getting too political on the show, but over drilling in the oil and gas industry. And would you say, does this merger combat that issue, or does it have any kind of impact on that?
Yeah, well, I won't comment on the politics side, but I'll say Liberty being based in Denver kind of puts it in a position to now it's a bigger organization. It's got greater capabilities, greater expansion across the U.S. And I don't have it here, but we have a map of where is each of the company kind of operational. There's some overlap in some places, less so in others. But in terms of Schlumberger, I guess having less than half of the stake of the organization or the newly formed company kind of shields it a little bit from those, although they'll be affected either way. I would say just time will tell how that'll evolve. There's just not a definite way to evaluate that.
So, I guess maybe another question to you, and again, kind of to the point that we had earlier. Do you anticipate kind of from the hydraulic fracture space in general, has there been, or do you expect any type of change in that space in terms of response to this particular deal? Or do you think, to your point, it's just kind of marching towards that needed or expected kind of consolidation in that area?
You raised a good point on that earlier, Michael. The business model aspect. I think more and more companies that are gonna want to think differently. Now, one way of consolidation is the merger that we've seen. Another exit has been bankruptcy, but that's forceful exit when you don't have somebody to partner up and help you. The other way of consolidation is just write off assets and just kind of get supply out of the way. So, but that also comes at a big cost if you can't back it up. We said earlier in previous shows, but we say it again, that you're gonna have to have a year, maybe two, of really resilient behavior, not spending discipline, and not everybody can do that, unfortunately, just because the cash flow and the demand for those services is not clear and apparent. So differentiation is what companies are going to keep looking for, just like Liberty seeks differentiation in this deal. Other companies are going to look for differentiation either through a top high graded, top tier automated, data connected, in some cases electrified fleet, or they're gonna find some way to get backing or partnership that gets them there. But many have been betting on recovery to happen, consolidation is needed. I think with Baker Hughes first, then Weatherford exiting that space, the merger between Schlumberger and Schlumberger's hydraulic fracturing business and Liberty Oilfield Services, and a few bankruptcies along the way. I think the consolidation is really well underway.
Okay, no, that's really good insight. So I know that's most of the time that we have for today. Before we wrap up, I know that we are going to be moving into a period of some upcoming conversations that are really focused on the energy transition and some of the technologies and kind of perspectives in that place. Do you want to give maybe just a quick kind of 30-second preview of what that'll entail?
Yeah, absolutely. So we at NOV, we have been doing energy transition related activities, efforts, business for years, and we've kind of thought that it might be worthwhile sharing what we have, what we can do, but really not from the lens of here's a product and here's what it does, but more so the educational aspect, kind of covering the landscape of why solar or why wind or why geothermal, and kind of dig more into why does it make sense today. Bring some subject matter experts from the organization or from outside the organization. Tell us a little bit why this, what's the need, what's the pain, how to get the levelized cost of energy to par with the alternative sources of energy, kind of breaking it down so that we understand the economics behind going into any one of these ventures. And each of these shows will also feature what NOV in particular is doing in that space and what kind of value it can bring.
Cool. Yeah, no, I think those will be great. So those will start coming down in the next few weeks, and we'll continue those on for several weeks thereafter. So looking forward to it. Great. Well, this has really been insightful as always. Appreciate your perspective and like we like to say, bringing the insight out from the NOV team. So Assaad, Mohanna, Director of Business Strategy. Assaad, appreciate your perspective and time today.
Thank you, Michael.
And thank you for joining us today. As always, if you have any questions or comments, you can email us at askassad@nov.com, or you can drop us a quick call if you have any questions or comments on the show. And we always like hearing from you and look forward to connecting with you. So from all of us here at NOV on the Ask Assaad Show, thanks for watching and for listening, and we'll talk to you later.